Hello, followers of the 4-year journey. I hope you're doing well. Bob Lucas here, June the 7th, 2022. Been about 6 weeks since the last video. I want to do a follow-up to that. Just talk about really the bear market at this point. There, of course, is zero doubt now that the bear market is here. I think every last remaining holdout has capitulated on the idea, and it is now common knowledge, of course, that we're in this bull market trend. The last video I did talked about the top already in when Bitcoin, I think, was around about 40,000. Confirmation was certainly in place of that top, and we've since, of course, seen price move as low as 25,000. I don't think that's going to be the end of it, and I'll talk about that shortly. So I'll talk about the update on the 4-year cycle, bear market thinking, and how we want to transition the thought process to bear market and not fear, which is pretty common in a bear market. I also want to spend some time on a little bit of a reflection on the cycle, sort of what went well, what could have been done possibly better, and then just talk about sort of a portfolio update to end the video. Probably won't be a long one, so let's get stuck into it. Let's begin, of course, with the monthly chart, looking at this from a 4-year cycle perspective. Of course, green arrows representing 4-year cycle lows, red representing the peaks in the cycle. The one takeaway, of course, is that from a cycle structure perspective, from a timing perspective only, it really has been a perfect 4-year cycle to this point. The top coming in right at year 3, a technical top months before that, and then the distribution phase to that peak for a price high, and now in the final year of decline. This period here was a period I expected a top when I first published a video 3.5 years ago. That was the timing band and the area for the top, of course, and I've covered this in prior videos. What we didn't see, and there are multiple reasons I believe for us not seeing that, was that run to the 6-figure range. Okay, that was at least my expectation. I think in general it was an expectation that most people held in this space, and that expectation, I think, really is born from the idea that these extensions in 4-year cycles will typically add sort of this 10x and more from the prior high. Of course, there's a diminishing return, and that was always something that was factored in. Each prior high, of course, is not going to move anywhere near as high as the prior high, purely because as market cap increases, it just doesn't make it's not feasible for for a cycle to extend to that to those levels. Even given that idea, this I think was a somewhat of a premature blow off. Didn't really reach any of those peak mania phases. Of course, looking back in hindsight, there were plenty of signals that the market was heated. I just don't think it reached that real mania phase that you saw, of course, in 17, into that peak and even prior peaks as well, even though the ecosystem was more contained and smaller in prior cases, certainly not in 17, where we had the massive breakout in Coinbase users and other users across the board. Just didn't see that, and for that reason, I think this made it a lot more difficult for a 4-year cycle compared to the prior 4-year cycle. As you can see from this 4-year cycle, it was just one tremendous trend that just gained in its rate of change to the peak, and ended with a pretty classic sort of blow-off top that, even in real time, in my opinion, was fairly easy to spot. Didn't have that type of extension right here, although it got extremely heated at one point into that February, March, April sort of peak back here in 2021. Just didn't reach those levels, and it reached those levels a little early in the expectation for a 4-year cycle. And I think that's where, at least on my behalf, it became a little difficult to spot a peak or a top, especially as it made a new price high at that point. But since then, once we lost that 10-month moving average and closed below the 10-month moving average, I think that's where it really was pretty clear at that $43,000 level that the peak was in. And that's the reason why I went ahead and sold for the second time some of the position in the model portfolio. Where are we now? That's the real question. Well, I think it's pretty simple and pretty easy to answer right here. Clearly, with the move below the 10-month moving average here, and now the 10-month moving average in a declining phase, you just don't see a declining 10-month moving average in a bull phase of a market. Or if you do, it's more of a flat line, kind of like as you saw right here. That was accentuated here by the March 2020 COVID decline, and that pulled it down slightly. But now we're in a full-blown declining phase. We know that from price, and what we're seeing here, we know that because we're now into the fourth and final year of a 4-year cycle. We also know that purely from the resignation in general of all participants in the space. All the influencers, all of retail, you know that through capital flows into the space. We know we're in a bear market, and that fits the 4-year cycle timing perfectly at this point. So we're in that declining phase, and the question then, of course, ultimately becomes, is this the bottom? Where's the bottom going to be? And the short answer is, like my analysis has been almost from the very beginning, that almost any path is feasible, that we should focus more on time than price. If you recall, in many of the earlier videos, I wasn't even sure if this 4-year cycle could even make a new all-time high. I warned that you can get a cycle that fails to make a new high, that can grind sideways for the full 4 years before moving higher. There are multiple versions of a 4-year cycle from a price perspective, and the same applies now as we now head towards the next big 4-year cycle low. What I'm most confident about, and again, that's never perfect, that's never an absolute, but what I'm most confident about is that we need to see more time unfold in a negative or a bearish environment to get through this current cycle for the next bull market to be born. And that means grinding through the next sort of 4 to 6 months into that timing for a 4-year cycle low. The 4-year cycle low is due in December of 2022. That cycle low, again, is never absolute, right? Cycles have this variance of where they could form. And generally, I would say one 60-day cycle on either end. A 60-day cycle is a 2-month period. One 60-day cycle early or one 60-day cycle late would be a more accurate window of expectation for a cycle low. So then that puts us into kind of this October timeframe, and then as late as a February timeframe for where the next low would likely form. In an extreme situation, we could look 2 cycles back, so 4 months back. That again would be extreme, and that puts us more into the August or September timeframe. Now, an argument could be made that one reason, and it's actually more than probably just an argument at this point, but one catalyst for not really seeing that big blow off was the fact that the Fed, and being an asset class that now has attracted a significant amount of institutional adoption and institutional capital, that capital now has to be viewed in terms of more of a broader portfolio and a more of a broader allocation strategy. And when the Fed really made it clear that they were moving into sort of this risk-off environment and inflation-fighting stance, that sucked whatever wind was left out of this market. And crypto, Bitcoin, being more on the speculative end on this with the higher volatility, it made sense that really did lead the markets lower. And there's also the element of China really clamping down this time. It wasn't just talk, it was a sort of an outright ban in general. And that really did have an impact on this market, a significant impact on this market. So the combination of those two, and the fact that, again, from cycle to cycle, we see this on either a 60-day time frame or sort of that 10-month cycle or the 4-year cycle, in any cycle, in any asset class, they don't rhyme perfectly, okay? They mirror to some extent, but they don't have to look and form and have the same structure. And that's another case. in point right here. So you've got a combination of one, an expectation that a cycle must mirror the other one perfectly, which is not true. Two, we've had this China and we had the Feds, which is probably the more impactful influence on this 4-year cycle. So that has brought us down now. But my point on the Fed action there was that it may also have this effect of forcing the market into a bottom sooner as well. If the economy slides quicker, if inflation numbers come in or drop sooner, it's possible. And if the equity markets begin to really sort of implode, or if, then you may get a forced cycle low situation. If you get some extreme kind of events occur, then it's possible that the cycle low could come in early. And like I was saying before, that could be as early as I think the August timeframe or September timeframe for an induced cycle low. Unfortunately, in that type of scenario, when you get an early cycle low form, my experience has been with other asset classes, early cycles normally come with extreme events. So a significant capitulating like event, high liquidity event. And so if we were to see an early cycle low, then my fear would be that we're looking at a much deeper price low. So it would be more of a V-type move, but a situation where we get a drop that probably tests the prior all-time highs of 2017, and then possibly also comes down to a deeper level where something like this $14,000 level to me sticks out logically on the chart as a place that could be attacked or found to find support in the end. That's not a prediction on my behalf. I'm really just outlining the kind of the extreme ends of what could happen. And I do that because folks have an allocation. I have an allocation that I'm prepared to hold into the bear market low and in preparation for the next bull market. But if I'm not aware of the worst downside scenarios that could form, I would then be susceptible to panicking and making a decision at the wrong time, at the bottom of a major capitulating event, just like March 2020, where I think a lot of people dumped their Bitcoin and obviously regretted that and probably found it very difficult to get back in until higher prices. You don't want to be doing that near the end of a 4-year cycle low. So if you're carrying way too big of a position and you can't weather sort of 3 or 4 months or 5 months of declines that go much deeper than where we are right now, then as I've suggested in the past, you need to right size that position so you can sleep comfortably at night. Okay, yes, you may give up some upside at some point, but if it helps you avoid a decision that's made in a state of panic, an emotional decision, then you should do that. You have to find a level of comfort in your position that gives you exposure to the upside, but doesn't force you to make wrong decisions like sell those bottoms. And then when the market recovers, you get that FOMO and you realize that you've sold a lot of your position and you're buying high again. Just from hearing from a lot of people and having discussions from a lot of people, that has been the theme from this 4-year cycle, whether it's the beginning move up to 14,000 where people were surprised early and bought that and then spent 6, 8, 9 months in a decline and sold. And then it wasn't until it got to all-time highs again that they decided that they would need to get back on board. So basically buying high a lot and then panicking on the declines. We want to avoid as much as possible that mentality. And that's why I always suggest take a smaller position in general, one that can be taken and the one that you can ride for the majority of the cycle. You don't have to be very early and you don't have to be out at the very top, but you just have to avoid being shaken out all the time and always buying at the wrong times, whether that's on a decline with selling or on a massive pump and buying that top. You want to get out of that mindset, and that's what you want to avoid with any scenario that's coming up in the near future into this decline. Now, my preferred view is that we don't get down to this 14,000 level. My preferred view, in fact, is that we probably will hold some of the gains of this bull market versus the peak of the last bull market. Do we come back and test that 19,000, 20,000 area? Very, very possible. I mean, we hit 25 recently. That is only another sort of 20% down from that level to test those highs. Nobody knows is the answer. I mean, you've got a lot of on-chain folks that were saying can't go any lower. You've got a lot of analysts out there that, Bitcoin just, my point is Bitcoin just surprises with its because it has such a high volatility. It's always going to surprise on the upside, surprise on the downside, surprise in the short term, surprise in the long term. And that needs to be built into your thinking and how you structure a position in this market. But ideally, because I know a lot of you want more of something more of substance when it comes to what I think is possibly going to happen, I think here we're going to come into this sort of November, December timeframe. That's where I think we need to wait. And I think that because in general, on the 4-year cycle timeframe, on the long cycle timeframes, things just take longer, right? It's relative to the length of the cycle. So when we're talking about a 4-year cycle or 48-month cycle, things happen in 4-month levels, in intervals. They happen over those periods. And we only just recently, like I said, it really was only in April that I think the entire market finally all put their hands up and said, yep, it's a bear market. So we've come to that realization point in the cycle. Okay, it's just common knowledge now that this is a bear market. But that's only a couple of months in. And typically, you need to go through that negative despair portion of a cycle for a decent amount of time. And on a 4-year cycle time frame, a decent amount of time will typically mean 4 to 6 to 8 months. And this is why from April, or even if you want to call it January, where it really was clear that the cycle had topped when it lost that 4-year, that 10-month moving average, you want to give this sort of that 8-month period, right, from that level. And that gets you into the timing band for the next 4-year cycle low. But again, what it does from a price perspective, I could draw a number of squiggly lines here, and any one of them could make sense. So that's not the point of drawing different scenarios. The point of drawing different scenarios is to find a solution or find a plan, or to develop a plan that you could use to position yourself in for the next bull market. So part of that plan means understanding where we are in the cycle, what the downside possibility is, so you can either make a decision now to maybe reduce position or reduce on a major little short-term move, for example. But more importantly, to realize that you don't want to be stuck in bear market thinking and in this very negative sentiment that gets caught up. We're going to see, and we're seeing right now, participants, mostly on the retail side, exit this market in droves. And when the market begins to just grind lower and lower, or even just sideways and sideways over the summer months, that exodus will continue, and eventually that will be the groundwork, that will lay the groundwork. The winter of a bear market will eventually allow for this market to then form its bottom and move higher. And that may take the path of, maybe over the next 2 or 3 months, we can rally back up to 40,000 and meet the declining 10-month moving average, then come back down. But I think at some point in this timing band, this $25,000 level that was reached recently is going to be tested. Does it form a double bottom in this timing band? It's possible. That's certainly a possibility. But then also, if you're not prepared for a scenario that really does come down and test possibly this last bull market high in 2017, or go down a lot lower than that, then you're not doing yourself the right service here in your preparation. My focus right now is on the next 4-year cycle low and being as well positioned as possible in my portfolio to take advantage of what I believe will be a very significant 4-year cycle to follow. I've talked about this next 4-year cycle as really being the major blow-off component of Bitcoin's sort of first 16 years, the point where it reaches a market cap of real significance into at least the low trillions of dollars. Of course, I thought we'll get more of a move in this 4-year cycle, but it really was this next 4-year cycle that for me was always the focus, and the one I thought would come up in a left translated cycle manner, meaning topping within the first year or two of that cycle into a blow off peak. And I still think that is very possible, but that's in the future. I want to be prepared and positioned as much as possible for that. And what that means is not necessarily getting the absolute price low, but accumulating and being in a fully positioned, being fully positioned by or near the lows, and then having the discipline to understand that it could be a process, but then being prepared and having that position for the next run higher. Just like I was able to do in this last 4-year cycle with the first video coming out at this level. That first video was in early December, and we still had a little bit lower in prices, but it didn't really matter in the end because the timing was right. Okay, we were in the range, in the zone, and price-wise, I think it declined maybe 10 or 15% lower from where I had gotten in. But that's in the rear vision mirror, just a timing error more than anything else. And even if you look at 25,000, if you're talking about it hitting 25,000, but then eventually dropping to 20 before the end, that's a 20% move. It looks significant, but it's 20%. It's not all that different to getting in at 3,800 and then seeing it hit down to 3,100 within a couple of weeks of the low. It's going to be difficult to time those lows, and if we get a capitulating market, yes, you can get a significant decline just over a week or two into those lows. Try and ignore that. What you want to do is you want to be accumulating in this area, and I'll have follow-up videos, I think, once we get closer to that. But I can tell you now, anything below this sort of $25,000 range, I would be very much interested in adding more to my position. And certainly anything below 20,000, what's going to happen is most people are going to panic and sell what they have left. I'm going to be thinking, I don't even care anymore. I believe in Bitcoin's future. I know we're close to a 4-year cycle low. I'm buying. And I don't care if it drops to 15 or 14 in the short term. Anything below 20, I'm not thinking, I'm buying. So just so you know, that is at least how I approach this. I'm afforded that luxury to some extent because I got in early and I sold some and I sold some more. Okay, it didn't sell anywhere near as much. So looking back at that agenda, one of the items I had in there was reflection. So a lot of people say, well, Bob, you said it's going to 150 to 200. Well, that was my primary view amongst other scenarios, and it just didn't happen. You know what? Such is investing, such is trading. It doesn't always pan out the way you think, but the position was right from the beginning at a very low level. And even today, with the remainder of the model portfolio, it's still up around 9x. That's not bad for a cycle that didn't really give us a whole lot, that most people really fumbled and weren't able to really extract a lot of great gains from. Sitting on a 9x return and having taken back all the initial capital and taken some profit, I think, given again the price action that we've seen over this cycle, is a very good result. And then I get this other question a lot from people. Well, I got in at 50,000 or 40 or 60, so I didn't make any money. It's okay for you to say that you got in early. Well, you know what? I'm sorry about that. It's not exactly my fault. Essentially, you bought a bull market too late. Yes, there was an expectation or a hope that it would go to 150 and 200. So buying at 50 or 60 for you probably wasn't a horrible decision. But in the end, it was still, if you look at this, it was still some 24, 26 months into a bull market. So you're buying at anybody that bought at that 40, 50,000, 60,000 level, you're buying 2 full years into a bull market. And probably you were buying because your neighbors were buying or somebody told you about that. So put it down as simply your first experience. Put it down as your practice run for the next one, right? Don't be disheartened by it. You got in late. You were made aware of it late for whatever reason, and you paid some price for that. Just don't make the wrong decisions and panic sell at the bottom. That should have been probably done at the 43 or 44,000 level and at least recovered most of that investment if your choice was to exit the space. But right now, anything below 30,000, in my opinion, shouldn't be sold. I think we're too deep into this 4-year cycle, too deep into the bear market, and also from a price perspective, too far down to sell. Again, can we drop another 30%, 40%? Absolutely. Bitcoin's volatility has told us that it's possible. But this late in the bull market, that's not something I would be focused on doing. Now, again, going back to reflection, there's one thing I know I could have done differently and should have done differently, and that was when we had this confirmation and we dropped down to 30, I think it was 32. When it came back up to 43, I sold something like 20% of the portfolio, or close to that. I should have sold 70% of it or 60% of it. Why? Because again, there was confirmation of the bull top, and then we had price recover by around 25% back to the 10-month moving average. That for me should have been a pure exit and banked most of the profit and kept some allocation just in case, right? So you always want to have that some exposure. So looking back, that was my personal takeaway from this cycle. And you learn from every cycle, you learn from every experience. None of them will be perfect, and that has been my lesson learned from that last 4-year cycle. Overall, still very happy with the outcome, and on to the next, as they say, right? We can only take and learn from those prior cycles and experience, and the goal is with each iteration of a cycle, whether it's a 60-day cycle again, or a 10-month cycle, or a 4-year cycle in any asset class, or just in trading in general, investing in general, those are iterations, and the goal is to improve as much as possible and not repeat errors. And this is what we want to prepare ourselves, and we'll do it all again, and hopefully we'll get a nice, good, low price to get in on, and then we'll ride another cycle. And then you'll be part of the club that got in early. And then what will happen is we'll get up to a higher price at some point. We don't know if it's 2023, maybe it's 2024. We'll be patient. But I feel confident that we'll see another all-time high again, and it will be a 6-figure number, okay? And then what's going to happen there is it's going to be all over the media one more time or many times. And the celebrities will be back in full force. And it won't be laser eyes, but it'll be something else like laser eyes. And there'll be offshoots. Maybe it's NFTs again. And then there'll be other altcoins. Essentially, the space will become speculative again. And you'll be somebody that's telling your neighbors. Or your neighbors will be looking at you and saying, geez, look at that. He got in or she got in. And I want in, and they will be buying the equivalent of what maybe some of you were doing in January, February, and March of 2021, just like many of you who were in on this 4-year cycle low with me did back in 2017, right? Every cycle brings in the new and cleanses the old with those 4-year cycle declines. And it's a rinse and repeat process from cycle to cycle to cycle. So that's why I said before, Don't beat yourself up if you got in late in this cycle, or if it didn't work out the way you had hoped, or if you made mistakes like buying leverage or buying top selling bottoms. Those are learning experiences. Slow it down, reduce your position size, get more disciplined, and have that longer term view. And in the end, you will do well as a result. So lastly, what's my portfolio view? Well, look, like I said, I won't sell anything below 30,000 at this point. I will ride what I have, and that's fine with me. Again, I can maybe do that a little more comfortably because I have positions from the lows and positions from the last bull market as well. But mostly because I just think we're just too far into this bear market right now. And I don't want to sell at that point. There is a case, and it's decent, that we can trend sideways and hold this level into the 4-year cycle low and not see a price decline into those lows and then go up. So I don't want to be completely out of my position at that point, just because there is a possibility, and a good one, that we can move low at that point. I prefer to just look at it from more of a buying opportunity as opposed to trying to sell here and pick up more at a slightly lower price. It's not what I want to do. However, what I will still be willing to do is on a rally. A rally is a counter trend move here. So a rally back to 40,000 over the next month or two in the summer months. If we see a rally right here, I gotta assume again that it's just a counter trend bear market rally, just a little pump before turning over one last time into the 4-year cycle low. So at $40,000, I begin to think that is more than enough of a recovery in price before the ultimate bear market 4-year cycle low that I could unload some more of my Bitcoin. Again, I would keep a stable position that I can always pick up some more on if it for whatever reason just keeps on going, but I would sell some of the position, a good chunk of it, at that $40,000 level. Otherwise, again, as I said, I'm prepared to wait it out and look for the opportunities below. Looking at this chart, where am I wrong on the 4-year cycle low? Because you always have to ask that, no matter how much you believe in your own model and your own strategy. There are times when, for whatever reason, whatever external catalyst or external force can completely throw a model apart. Okay, nothing is foolproof. Well, I'm looking at this here, and I'm looking at these two candles from March and April. The highs on those around 48, 49,000. Bitcoin has absolutely no business trading above 48 or 49,000 in this bear market. Absolutely none, as far as I'm concerned. And if we get to that level, I would really, really think that something huge or something big is happening, and that we're off for whatever reason, and that this would be the low at that point in May, and that would be extremely early. But again, I would have to respect the price action above everything else, because it just wouldn't fit a typical or any 4-year cycle. But until that happens, or if it ever does happen, again, a counter trend move, a rally back to 40, to me gets me out of more of my position, and then I would have even a bigger cash position to allocate back into the next 4-year cycle low, because I do think if we can rally back, and it's possible, right? Sentiment, even in the short term here, is pretty extreme. And as you can see, price is fairly extended below this 10-month moving average. So just a snapback, a quick 4-week snapback back to 40,000, 42 even, is not, it wouldn't be a surprise to me at this point. So that's my strategy. Otherwise, I've just got my eyes focused on the next low, the possibility of a low. And I would ignore the timing. Again, as I said, below 20,000, I start to get just really greedy at that point, because there's blood in the street and I'm greedy. I'm just buying. Otherwise, I'm patient. Okay, I've got all summer. I'm going to focus on other things. I focus more on, again, what has transpired over the last 4-year cycle, what I can do better next time. But I'm also want to focus on myself a little bit, or maybe other asset classes. But summer months are coming here in the Northern Hemisphere. I'll go out and just have more barbecue and spend more time with my kids and out in the garden and do other things, right? Because there's more to life than just focusing on price every morning and refreshing that price all the time. And that's been one of the beauties of just having a long-term view, getting in early and then just selling one small position at 28 and selling again. Should have been a more comfortable ride. And again, like I said, a 9x to this point. You want to just replicate that as much as possible. And I certainly am attracted to replicating that in my positions. And that's my view for the remainder of this 4-year cycle. I will look to focus and do another video in the next probably 8 weeks or so, 6 to 8 weeks around the summer months. And then we'll probably have a better picture. I wouldn't be surprised if we have a good move up, like I said, to around 40. And then I think it would look to me fairly obvious, like we would then be preparing for that final run into those cycle lows. But again, as always, find the right position that you're comfortable with. Don't get greedy. Don't get sucked into FOMO. And don't let the fear take over. Thanks very much, everybody. I appreciate you. All the best. Take care.